So right before I decided to film this video, my wife and we had frozen pizza for dinner. And I don't know what changed in the last 5 years or so, but it was really delicious. And I'm an investor of Domino's and Papa John's, but if frozen pizza tastes that good at a fraction of the cost, Anyways, these are all the companies that are reporting their earnings on a high level. If this is all you care about, then there you go, and I'll talk to you next week. But if you want to stick around, we're going to do a deep dive onto each individual day, Monday to Friday. On Monday, honestly, I think there's only one company that's worth our attention, and that's SAIC, also known as Scientific Applications International Corp. They basically do government IT work and systems engineering for the military, federal agencies, and local city governments. Very similar business model to Booz Allen Hamilton, a company that I just made a deep dive analysis video on. However, SAIC, far less prestige and weaker financials. Would I want to invest into this company? Absolutely not. However, I do think it's important for us to listen to how their earnings go, because if the Doge cuts are impacting them a lot worse than I think, then I'm going to back off from wanting to potentially invest into Booz Allen. Because if SAIC is going to be negatively affected by the Doge cuts because they are contingent upon government contracts to make a bulk of their revenue, then Booz Allen is also going to suffer. So that's the only reason why I'm paying attention to this one. I'm not invested into Booz Allen yet. But if SAIC comes out on Monday and it's like, dude, we're crushing it. The Trump administration loves us. Our contracts are going through the roof. Yes, federal government spending for federal government employees is going down, but we're not the federal government, and our revenue is increasing. We're taking their spots. If they say something like that, dude, my tits are going to be jacked for Booz Allen. You already know how bullish I am on that company. And I think right now they're undervalued. But other than that, I really don't think there's any other companies we should care about on Monday. With that said, dude, Tottenham played AZ once again in the Europa League Cup, but this time in London. And it went in our favor. We won 3-1. By the way, one of you put me on, and you taught me that this team right here is actually pronounced AZ. So thank you. So yeah, we beat AZ, and on the aggregate score, it was 3-2. So we won by 1 goal, and now we're moving on to the quarterfinals. That's amazing. I knew we had it in us. It's just, I think right now the boys, they need like a sports psychologist to hype them up, to get their self-esteem back up. Because I feel like a lot of the times when they get the ball, they know what they should be doing, but instead they choose to do the safer, say like you can make a through ball, or you can make a cross, or you can take on your man, you can dribble right at him, go one-on-one. If you beat him, that opens up so much more. Instead of doing that, I feel like with the 4 months of going through defeats again and again, their self-esteem is shattered. So they always opt to do the safe and the boring. In soccer, that's a bad thing. In investing, being safe and boring, phenomenal way to go. That's how you can sleep soundly at night. That's why I do dividend investing. I know it's not flashy. I know it's not sexy. On any given year, my total return per year is usually like 10 to 12%. It's not sexy. There's day traders out here and cryptocurrency guys making 10 to 12% in a single day. Me, 365 days, I'm happy to get 10 to 12% total returns, including the dividends. I like the safe, but in soccer, you have to be ballsy. You have to believe in your ability, in yourself, to make the crazy passes. And that's what we saw in this game. This is the Tottenham Hotspurs, as you can see by my background. You see the flag right there? Sick, right? Seattle Seahawks, which is the football team that I support, and then Tottenham Hotspurs, which is the soccer team that I support. It was a really good match. Really proud of the lads. The boys. Let's go. Moving on to Tuesday. Tuesday, once again, I honestly think there's only one company that's kind of worth your attention, but not really. It's Consolidated Water. It's a water utility and regulation company. But I feel like when it comes to water companies, if you're bullish on the future and the purification and treatment and sewage systems of water, the only one, the golden standard, is American Water Works. Everyone else, they might be competing with them, but they're a clear second place. American Water Works is the way to go. I'm invested into American Water Works. I thought about selling out of them a few times, but I think it's one of those few companies that are a buy and hold for almost forever. Their fundamentals, Their business model is so simple, I just don't feel like anything is going to change to impact their economic moat. So American Water Works, way better than Consolidated Water. I took a look at their financials on a high level. There's tiny numbers. They make tiny amounts of revenue and free cash flow in comparison to American Water Works. I mean, because they are smaller cap, that means their volatility inherently will go up and down in bigger extreme swings. So if that's up your alley, Consolidated Water. And because I didn't know what else to put to fill up this blank page, I posted a photo of myself when I was a cadet at a military academy. This is like almost 20 years ago now. Some people say that I actually look younger now than I did 20 years ago when I was in college, which I think is pretty wild to me as well. Because back then I was super tan and I was probably about 25, maybe 30 pounds heavier here. Like I was almost like pure muscle. Now I'm kind of skinny, pale, and I look younger, I guess, but I don't know. But yeah, a photo of me, a blast from the past. Whenever I look at photos of myself from like 2010, 2011 and stuff like that, it's like, man, time flies. It's one of those things where I honestly feel like one day I'm going to wake up, I'm going to be 44 years old. I'm going to be like, dude, what the hell happened? Life just happens so fast. And we need to redefine what it means to be in your midlife, right? Because most of us, we're going to perish by the time we're like 70 or 72. So I don't know why we are given reasons to believe that our midlife is at 54, 55. Dude, at that point, you're closer to death than you are at your midpoint. I'm in my mid-30s right now, and that is the more accurate portrayal of being in the midlife. And that's why I'm trying to cherish each day and just try to do my best in living. So I feel like in life, it's not enough just to work. It's not enough just to get promoted or to fall in love. All that stuff is good, but I feel like another very integral part of life is to enjoy it. You only get one chance at this unless you believe in being reincarnated as a cockroach, one of those Oriental religions or whatever. If you believe in that, whatever. But for me, I only believe that you get one chance in life, and then it's done. That's over. So you might as well find things that you enjoy to do outside of work, right? To help pass the time, hobbies, friendships, give back to the community, help some people out. That's something I'm trying to remind myself on. I've been meditating and reflecting on that this past weekend. So I don't know who needs to hear that out there, but hopefully it resonates with someone. That life is meant to be enjoyed as well. Don't just think of it as a place where you need to grind your ass off and just work hard and come home and be stressed out and just drink yourself to sleep. Like, that's not a way to live, right? Find some stuff that brings the positivity out of you, the optimism that makes you happy, that makes you excited. For me, I mean, call me corny, but it's sports. It's working out. It's, I like eating a lot. And these days I've been getting back into reading. I have ADD, by the way, and that's why I have so many hobbies that are on a rotating basis. But, and I'm also starting to get into, Warhammer. By the way, dude, I don't know what it is. I said Space Wolves last time, but something about the Grey Knights. I don't know, man. It's like that. Oh, they have my attention. Like Space Wolves, I feel like that's where I should go with, right? The faction or the army. But something about the Grey Knights, man, they're so sick. If you at all like StarCraft, Warcraft, Lord of the Rings, anything like that in that fantasy genre, I think you would like Warhammer too. One of these days I need to make my decision so that way I can buy some figures and then I guess get to painting them. Can't believe I just said that. Dude, not in a million years did I think I was ever going to collect little action figure toys and paint them. But it makes sense. So I remember when I was like 5 years old, my mom took me to the Dollar Tree. This is in the 90s, by the way. And we bought, I don't know if you remember what it is, but do you remember those green soldiers? They were really small and they would be in poses like a guy holding a rifle or another guy about to throw, a grenade. And then you would put those stick army figures in your little battle formations. I did used to play with those, right? And then, I don't know, I think after like the 5th grade, I stopped playing with toys altogether. But as a grown-ass man, quickly approaching 35. Here I am about to pick up toys again. It's interesting. That's the circle of life. Maybe that's a midlife crisis. All right, I'll shut up. You're like, dude, what is this video? I thought we were going to be talking about the earnings. I got you, okay? Put your pants back on. Wednesday. Okay, at least Wednesday we do have a few companies. Not a lot. I mean, I filtered through it. There was like 200 companies or something reporting on Wednesday. 180 of them, absolute trash. Speculative, nonsense financials, not worth your time. Number one, Williams-Sonoma. This is a company that's always mentioned in the dividend investing community, and I had never really thought about it, right? But it's a company that is, they have like Pottery Barn, they sell furniture, home goods, and it's the store that millennial folks and the older people, that's what they prefer, right? Instead of IKEA, instead of going to Target. When we think about the younger kids like Gen Z, dude, they will not go into a Williams-Sonoma. But this is for people that have a higher discretionary income. So like the higher income folks rather than like the below average spending ability. So their customer base right off the bat, I think it's a good business model. And they, I looked at their profile and I was kind of shocked. I don't know how much you know about this company or not. Remember, they sell furniture, home goods stuff like clay plates and cups, right? I'd be like, okay, whatever. Maybe a 1%, maybe a 2% growth rate. But no, dude, these guys are crushing it. So much so, in fact, that their dividend profile, I did a double take. I was like, there's no way. Their dividend payout is growing at a rate of 26% year over year. Their numbers, financials, dude, they're crushing it. I don't know why people aren't talking about Williams-Sonoma more. I think it's a pretty solid company. But one thing I want to mention is this is the better investment and future in comparison to Wayfair, the online furniture store. However, even though some of their metrics are crushing, what to me was alarming is their revenue. That's what investors refer to as the top line. It has been decreasing year over year, which is, of concern, but in almost every other category, they're crushing. So it seems like, without doing a deep dive, it seems as if they're losing their market share or their customers are not shopping with them as frequently as in the past, but they figured out how to do their operations more efficiently. So their margins are going up, their net income is going up, and they're making more cash on per transaction, which is why they're able to fuel and grow their dividend at such an aggressive rate. That's what I'm basing educated guess looking at their numbers on a high level. But that's Williams-Sonoma. Would I ever be interested in investing into them though? No. Nah. If you are though, let me know. Like, what's the investing thesis? I'm open-minded, right? Like if I have an opinion of something, but it's not concrete and I don't have full confidence, I'm always willing to hear the other side of the argument. Because the worst thing that you can do is like, let's say you're investing into something and it's going on a sell-off and you're doubling down on it, like, I believe in this company. And all you do is look for confirmation bias, an echo chamber saying like, oh yeah, this company's good, but eventually they lose more money and they go bankrupt. Like, that's the worst thing you can do, right? I think it's really healthy, especially if you're intellectually curious, to question your investing thesis, to have someone poke holes in it. Like, I am super bullish about Google, and whenever I hear about other people's rebuttals and the counter arguments, it falls flat to me. Like, I hear it, and I'm glad that I hear the other side of the aisle, but I'm like, nah, I don't think so. And I think that's healthy, right? To have two sides of the coin, and after learning about the pros and the cons, then making a good decision. I feel like if you do confirmation bias and you turn a blind eye to all the uglies, the ugly side of the coin, and you only pay attention to the big boobs and the big booty, and that's all you care about, then you're also forgetting the fact that they have a stinky breath, armpit hair that's longer than the hair on your head, and they smell. You also have to take all of that into consideration, right? So, yeah, let me know. If you're invested into Williams-Sonoma, like, what's the bullish investing thesis? Anyways, let's move on. We also have General Mills. I have this highlighted because I am invested into them. Funny enough, I own 5 shares of them. Really funny. And my investing thesis is this. They predominantly, I'm not going to say a monopoly, but when you think about a grocery store that has 20 aisles, about 15 out of those 20 aisles will have a General Mills product located somewhere up and down that aisle. They occupy the grocery stores. And I feel like grocery food items, preparation toolkits, whatever it is, Betty Crocker, grocery is here today and it's here tomorrow. Food is essential. It's a business model that is so boring and it's easy to understand that I like it. And they were undervalued not too long ago, went on a massive sell-off along with all the other food CPG companies like Hormel. I got to figure out how to pronounce it one day. I don't know. Conagra Brands, Kraft Heinz, like all of those were going on a massive sell-off. And now they're making a decent comeback and a rebound. But yeah, I'm just curious to know how they're going to do, because my investing thesis, why I'm bullish on them, is for their pet food brand known as Blue Buffalo. I think Blue Buffalo, dude, anybody that has a dog, the thing is, like, when you go to the dog food aisle, you're going to have so many options, so many choices, right? But when it comes to like your pet, usually when you know that your dog friend, or I guess your furry family member, if you know they like a specific type of dog food and they gravitate towards it and they eat it well, they digest it, they don't throw up, then they end up buying that exact same dog food brand, whatever it is, year one, year two, typically till the dog passes away. It's not because of like there's an economic moat in anything they do differently. All the dog food brands have their own marketing tactics. They all have like, oh, we use organic this, or the ingredients are healthy. Like they all say the same advertising and lip service. But I think what differentiates Blue Buffalo is the brand. It's kind of like why people would rather go to McDonald's than Burger King, or why someone would go to Starbucks than Viking Bros. What's that coffee shop that is like super unhealthy, but it's delicious? It's just full of sugar. Yes, it's Starbucks, but it's like another one. I think it's called like Viking Bros. But anyways, it's kind of like that. Blue Buffalo is like the brand when it comes to pet food. So bullish on that. And yeah, if they go on a massive sell-off, I'll probably just pick up another like 2 or 3 shares. I definitely think it's a company that's here today, here tomorrow. It's a boring business model, which I really like. And last but not least, on Wednesday, we also have Five Below. Now I want to say this. Dollar General it's the pizza. I just had the pizza and I'm burping them. I apologize. But Dollar General just reported their earnings and they posted historic highs for their revenue. However, Dollar General's operating margin, it's been getting crushed by inflation and they had to close a bunch of unprofitable locations. So when I think about that in the context for Dollar General, I think that's a good thing in the long run, because from like 2020 to 2023, they were aggressively opening up new stores left and right. And they're not opening up Dollar Generals in Atlanta, Philadelphia. No, they're opening up Dollar Generals in places where it's a food desert, grocery desert, in places where they don't have access to a Walmart within 20 miles. So like in the middle of nowhere, Oklahoma. I'm so sorry for picking on Oklahoma. Let me pick on another state like North Dakota, South Dakota, Wyoming, Montana, these random ass country towns. That's where they like to do business, because then they have a monopoly. And it's sad and it's unfortunate because they usually put the small mom and pop shops out of business. They copy the playbook from Walmart. Whenever Walmart opens up in a town, almost all of the similar retail stores have to close because they can't compete with the prices, the scale, the service, the availability of products. They just can't compete. And that's what Dollar General does, except they like to do it in the rural country-ass areas where you're lucky to get one signal bar on your phone. And that was their game plan for the longest time, just opening up these stores aggressively. However, I think this is a good thing that they're closing some of them, because not all locations were going to thrive. I think they were just opening up stores to keep playing along with the bullish investing thesis that Wall Street wanted to hear from their leadership team. Because I think if you close the underperforming units, it's going to eventually have a positive impact on their bottom line. So I don't see this as a bad thing. Because when Dollar General said we're going to have to close locations, Wall Street punished them. which is, I don't know, I don't see eye to eye with that. Because, well, I guess I understand where they're coming from. Because in the short term, I think their financials are going to be a little wonky. Because if you're closing unprofitable stores, then your overall available revenue is going to shrink a little bit, right? However, I think the quality of the revenue that's coming in is going to increase. Because let's say they had an unprofitable store that's losing $200,000 a year to operate. The P&L, you're in the red by negative 200,000, and you times that by like 100 more unprofitable locations. That was probably negatively affecting their bottom line. But now that you're getting rid of those, I think it's going to be a good thing in the long run. But that also begs the question, will their top line be able to grow organically? Or will they have to start acquiring other types of dollar-oriented stores? I guess we'll see. So I think Five Below, I think they're going to have a shared experience with Dollar Tree and Dollar General. Because Five Below, it's not your typical dollar store where you can go in and get whatever you need, like a shaving razor, detergent. Five Below is usually where you go to right before going into the movie theater, stock up on candy bars so you can sneak it in, or you buy gadgets and toys. That's what Five Below is. So considering the tariffs that are coming into play and how Five Below probably imports all of their goods from China, I can't think that it's going to be a good thing for them. I think their margins are going to be absolutely demolished. And this is a company that I used to be invested into a while ago, almost a year ago now. And I sold out of it after a short profit because once I started to realize, like, dude, this was during like the presidential race. And I started to listen to their economic policies in the Wall Street Journal. And I was like, okay, if this guy wins, our current president, if he wins, tariffs are going to happen. Like, he's going to guarantee it's going to happen. And if that's the case, companies that are making hands over fist profit right now, importing cheap goods from China, dude, they're going to get demolished. I need to sell out of this company. And that's what I did. And it's okay to go back on your investments from time to time. Like, I like to buy into companies and try to hold them at least 3 to 5 years. I hate the fact that I had to sell out of them so quickly. But I don't know. I didn't feel comfortable holding on to them. And when I say a year ago, I mean, this all went down, I think like June to August or something like that of last year. So almost a year ago. So yeah, I can't wholeheartedly recommend anyone to look at Five Below. Same with Dollar Tree or Dollar General. Dude, I think they're all going to suffer, at least for the next, I don't know, maybe 3 to 5 years. When do you think the high inflationary environment is going to end? For me, I feel like we're going to go back to normal, quote unquote, probably in 3 to 5 years. I think then they'll be doing okay. But I think in the short term, dude, I don't know. I think anybody operating with like buying a product for 20 cents from China and selling it for $1, it used to be profitable when there weren't such high tariffs. But as of right now, I don't know. But on the flip side, some people are arguing that these dollar-oriented stores are going to thrive because as the economy, heads for the worse, they're going to not want to spend their money at Target, but rather they're going to go to a Dollar Tree. So, I don't know. I guess that argument is valid, but for me, you need to have that conviction, that faith. Like, I'm willing to die for this. Like, I believe in it, and I just don't. It's too much uncertainty surrounding the dollar business model that I just not comfortable. No, they didn't. They lost. Oh my goodness. I watched the whole match. Dude, they dominated us. St. Louis just put a leash and a collar around Seattle and just took us for a walk. Dude, we looked confused. We looked terrible. I don't know what happened. So we lost. So yeah, if you're not following the MLS, dude, I'm telling you, it's not too late. It's not too late. Like, this is the perfect season to jump on board. Because during the pandemic, they were playing in empty stadiums. The atmosphere, the energy, the fan base was non-existent. But if you just pull up the highlights if you're not familiar, just pull up the highlights for Inter Miami. It's the team that Lionel Messi plays for. Dude, they have like fireworks. The stadium is jam-packed and the energy is crazy. It's kind of like hockey. It's like a smaller, more intimate atmosphere. It's not like American football or basketball. I think the next decor that I'm going to put in this room is a Seattle Sounders flag. Even if they have a losing season, I'm not one of those like fans that jump off just because they have a losing season. Because I would have done that with Tottenham a long time ago when they were losing like 20 games in a row. I feel like if you truly support something, your partner, your sports team, or whatever it is, you go through the thick and the thin with them. If it's only convenient for you when the times are good to stay with them, then dude, you're wishy-washy. You gotta have that durability, promise, commitment to be there in the bad times. That way you can celebrate the highs. I feel like if Tottenham were to win the Premier League, dude, I feel like it would feel so much more like a celebration because I endured through this season where they were in the relegation zone at one point. I think at one point, Tottenham was like number 17 or 18 on the table out of 20 potential teams. Dude, that's so bad because they're usually a top 5 or top 6 team. But anyways, all that to say, whatever it is that you support in, that you consider to be your team or your partner, whatever it is, you got to go through the bad times to properly enjoy the good times as well. Or at least that's what I think. Let's move on to Thursday. What do we got? Thursday, we do have some companies. The first one is Accenture. It's a consulting company where they also have a government section called Accenture Federal, where they do consulting for the federal government. Very similar business model to Booz Allen. However, unlike Booz Allen, Accenture makes if you look them up, dude, this is a compounder in the stock market. Ridiculous. And then we also have Darden Restaurants, which you already know how I feel. I think their business model, fantastic. Their portfolio of restaurant brands, phenomenal. Would I invest into them? No. At this price point, I think they're way too overvalued. However, what I have been investing into, at least like 2 months ago, I invested into 10 shares of Papa John's Pizza. And I'm up in the green a little bit, which I think is hilarious. But I also started to invest into Chipotle. Yes, they don't pay a dividend. I hear you. They're trading multiple PE is like a 45 or a 50, and you might be like, dude, that's too high. But no, I think their financials and fundamentals justify their premium valuation. It's a company that just always finds a way to grow double digit across the board. I think for me, I feel like Chipotle is an easy buy. Why am I talking about Chipotle when it's... Anyways, Darden Restaurants, good. We also have Micron Tech. We also have Nike. Dude, Nike, I know there's a lot of people who believe in them. They think Nike is undervalued. I hate to be the bearer of bad news. I don't think we've seen the worst yet. I think Nike has more room to fall. I think they're thrown. I think they're best-in-class metrics. I think that era is over. When I look at Nike right now, it reminds me of Under Armour back in the early 2000s. Nike they lost that magic. I think Nike for the next 2 to 4 years, I think they're going to be relatively flat, meaning they're going to go up to $80, go down to $60, back and forth, until they can prove to Wall Street that they deserve to have a high premium trading multiple again. But Nike is a retail clothing company that I would not want to invest my money into. 20 years ago? Absolutely. In 2025? Nah, dude. No. We also have FedEx, which the economists and analysts and amateur investors like you and I, sometimes, alongside with Amazon and Walmart, we look at FedEx as a pulse of how the consumers and the economy is doing. I think if they report a bad earnings, I think the rest of the market is going to follow suit. Maybe like in a very overreactive, emotional sell-off, like maybe 2% decline across the board, and on Friday, it'll just rebound as usual. Interestingly enough, FedEx and UPS usually parallel. If UPS crushes it and they go into the green, then FedEx usually follows suit as well. But if FedEx, misses their earnings and they get crushed, UPS gets crushed as well. Between the two of those, I'm invested into UPS. I think right now I'm at a break-even point. And at one point, dude, I was deep in the red. But I held on because I'm like, dude, UPS, solid company. They take care of their workers. And I think they're better than FedEx in terms of like service and delivery times. But I don't know if that's a good investing thesis or not. But I felt like the differentiating factor of why I picked UPS over FedEx eventually was because UPS genuinely pays their workers well and takes care of them. And I always thought about it, because when I used to be a corporate manager, I always thought about it like this. If you take care of your people and they're happy and they're not disgruntled, they're going to perform better for you. Because if you underpay them, you don't treat them right, you don't care about their service to the company for 10 years or 20 years, they're always going to be constantly interviewing with other companies and looking for a way out. But if you take care of your people, they'll take care of you. And I don't know, maybe that's why I've always had a pretty good time with whoever I managed or the teams that I supervised, because I always took care of my people. On a corporate level, that's what I feel like resonates with me from UPS. Maybe they don't. Maybe they treat their drivers like trash. Maybe they're a terrible company. But what I do know is they love their unions and they pay their workers well. So for me, I think that's a green flag. And underneath them, we also have Lennar Core. It's one of the many home building companies available on the stock market. And I took a look at them on the surface level right before filming this, and dude, they're going on a massive sell-off recently. And that's because when you think about it, when it comes to home building companies, very cyclical industry. You're not always going to be mass producing new homes every single week, every single quarter. It's ebbs and flows. Sometimes there's high demand and sometimes there's low demand. All that to say, when the times are good, they're really good. And this company will be probably one of the better performers in the stock market. On the flip side, when the times are bad, their volume of building out new neighborhoods or homes, that's going to decrease. So I think Lennar and any other like home building companies like Toll Brothers and everything, if you understand the landscape of real estate and homes, and then you should also understand that the market switches back and forth between a seller's market and a buyer's market, and that really depends on supply and demand. If you feel bullish about people wanting to buy a new home during a market crash, like this is the time for us to scoop up new homes, and there's a lot more demand on the market because of that, then Lennar makes sense. Me personally, I'm invested into Realty Income Corporation, and I think for me that's enough real estate coverage. I mean, I would like to also buy into that's the ticker symbol, Rexford Industrial, which is a real estate industrial company that operates only in SoCal, that I think right now, if they keep dipping and they go below like $37, dude, I'm in. That's another one that I'm considering. But in terms of residential home building companies, I don't know. I would rather buy into the REIT, the finished product, the ones who already own the property and they just collect rent, rather than the ones where it's contingent upon a cyclical business model, if that makes sense. But as of right now, I think Realty Income, that's enough for me. And then on the picture, I had to post this one right here because I don't know if you are aware or not, but all around the world, in Europe, in the US, in Asia, whatever, a bunch of people are protesting against Elon Musk. And I think the narrative is they're sick and tired of his involvement into US politics because he's a billionaire businessman. And some people are questioning, is he doing it from an altruistic perspective, or is he selfishly trying to take care of his own business endeavors? And that's why he's Trump's right-hand man. A lot of people are not happy with Elon Musk. Personally, between you and me, I'm neutral towards the guy. I don't own a Tesla. Dude, I don't even have a car. I ride a bicycle around my tiny little Japanese town. But I don't hate the guy. I don't love the guy either. There's some people out here who worship him. There's some people out here that absolutely hate him. I'm neither. But here's where I'm coming from. This is a rant, by the way. This dude is a billionaire, and when I think about how much good he can do with his money, instead of just firing a bunch of people, federal government employees through Doge, I think the one that pisses me off the most is the fact that they're firing so many military veterans that work for the VA, firing the dudes that serve the country. Like, that rubs me the wrong way, right? When I think about all of that, I'm like, that's what he chooses to do with his time and energy when he's a billionaire. When if he were to just donate, I'm not saying just because you're rich, you have to donate your money. But if he were to donate some money here and there and help out the people, help out, families that are going through a rough time, to help pay for, or I don't know, there was like a church in the Midwest or in the South here in the US. They collected all their money to pay off an entire hospitals, all the patients that were drowning in medical debt. Now, did it have to get to that point for the hospitals to intervene? No, it did not. And that's why I really think the American health insurance industry we need to reform. Things need to change. But anyways, that's neither here nor there. But the fact of the matter is, when you are valued at like $500 billion, dude, you already won at life. Why not just help the people that are below you, around you? Why? Like, after you make a certain threshold, like whatever that number is, like after 50 million, is that 60 million going to make you any more happier? You can only own so many materialistic items, right? It's like, why not use some of that money for good? So that's where I'm coming from. So when I think about his moral compass and his care for humanity in that lens, I'm like, I don't know if I like the guy. I'm not going to say I hate him. I'm not going to say I love him, because I feel like when it comes to the rich, I think psychologically, this is different from like dividend investing and becoming wealthy, right? You and I were the little people. Even if your portfolio has $5 million, you're still considered a normal person. I'm talking about the billionaires right now, right? When I think about them, I feel like it takes a certain personality type and work ethic, success, and luck to get to where they are. Like, I give credit to where credit is due. But I just feel like once you hit that threshold of having enough to survive and thrive and to eat out whenever you want, to buy a new car whenever you want, is that extra 50 billion going to make you any more happier? So why not use some of that money for your fellow humans, right? I don't know. It just rubs my ass the wrong way. And I'm not saying that Elon Musk has to be like the billionaire Chuck Feeney, which, by the way, dude is billionaire. The last 10 years of his life, he started to donate 99% of his wealth in order to help underprivileged kids go to college. And there's so many more stories like that. I'm not saying he needs to give away 99% of his money, but I'm just saying, like, with all that money, like, dude, you've already won in life. Why not just help some people out? And the reason why I say that is because I came across this story earlier today when I was stretching. Yeah, did you know I stretch in the mornings? By the way, if you're not doing it already, I encourage you. When's the last time that you touched your toes? Right? When's the last time that you were able to do some yoga poses? I feel like flexibility is one of those things where it's you use it or you lose it. If you don't actively stretch, you're not going to be able to touch your toes. And I say that, and I still can't touch my toes. And that's why I'm trying to touch my toes, and that's why I stretch. But anyways, I came across the story of a guy named Harris Rosen. He's a millionaire for the city in Florida, and it's one of those like very poor, low-income places where there's a lot of rampant crime. Kids are dropping out of school, and it's one of those things where, like, if you're born into that neighborhood, you're already dealt a terrible hand in life. But it's one of those things where it's like, this is my way of life, and I'm just gonna die this way too, doing drugs, crime. And he decided to just adopt that city and pump a lot of his leftover millions of dollars, because he was a millionaire. He had everything that he needed. And so he was like, well, you know what? I'm just going to use my remaining cash on hand to just help out these people. And he adopted the city, started to pump money into social programs, daycare, educational centers. And eventually, after like 20, 30 years or something, he almost single-handedly eradicated the crime rates. The high school graduation rates went from like 60% to like almost 100%. All that to say, like, Imagine if all of these greedy ass billionaires were to use some of their net worth to help out humanity, to help that struggling mom that's has like 3 kids, 3 mouths to feed. Their father passed away from a drunk driver hitting them head on, collision traffic. So now she's left to work 2 to 3 shifts to pay for the food, and she's struggling to get by. Imagine if all the billionaires would just hand a little money here and there. For them, a billionaire, like $1 million is nothing. 5 million is nothing as well. That's why I'm like, imagine if the billionaires were just, if they had a little more heart. That's all I'm trying to say. So I guess on that basis, I'm not a fan of Elon Musk, but I do like his companies. SpaceX, the Boring Company, Tesla, I think it's nice. But in terms of like on a personal level, I just, instead of Doge, if he were to have like some kind of foundation or charity organization where he helps out, areas of poverty, or like a foundation to help employ people with Down syndrome, or to help end hunger, something like that, dude, I would be a fan of the guy. But as far as I'm concerned, no, he's not doing any of that. He has more money than he knows what to do with, and he's firing. I get why they're firing people across the government, but it just rubs me the wrong way when they're firing people that are helping other people in need, if that makes sense. Like people that are working for like the Social Security Administration, Veteran Affairs. When I think about that, it rubs me the wrong way. Anyways, dude, I went on I'm so sorry. Let's move on. Friday. That rant right there, I probably lost 10 subscribers. I'm sorry. But that's how I feel. I'm actually not sorry for that. I wish there was less greed in this world and more people were willing to help one another. I'm not going to apologize for that. And even if you're not rich, if you help people, it shows like, dude, you have a good head on your shoulders. I think that's one of the reasons why I really appreciate my wife. Even though we're not well off, and even when we were financially struggling, she, quote unquote, adopted a kid through this program. I'm not going to say which country, but in South America, super poor. But we were also poor. And she continued to pay for all of her school supplies, food, birthday gifts, and all of that, even during our lowest moments, even when we were struggling. So like, isn't it crazy how like the working class people, we understand how other people are struggling. But for these rich, greedy ass billionaires, they don't know what it is to struggle. And I know that sounds judgmental and mean, but they don't. When you have so much money, you can pay off all of your problems. Your hairline's receding, you could just get a hair transplant. You're lonely, you could just buy yourself love. You're bored, you could just buy a company. And the list goes on and on and on and on. The working class people, I feel like we understand each other's problems and struggles, so we're willing to help more often. But for rich people, when they see someone struggling, like there was a photo of Hillary Clinton like 10 years ago when she was running for her presidential campaign, and she walked into a working class family's apartment and she looked appalled, like this is how people live. I think the rich, they have no idea what we go through. Like the struggles, the setbacks, the obstacles, what worries us, what stresses us out. But if they were to just have and when I say they, I mean if the majority of them were to have a heart and help people, I just feel like the world would be a better place. Anyways, let's end it on that note. Friday, I think there's 2 companies. The first one is the Chinese Tesla, meaning they do the exact same thing. They make EVs that apparently are just as good as Tesla, but at a cheaper sticker price. And then we also have a Carnival cruise line, which whenever I see this company, it pisses me off. Reason being is like 7 years ago, maybe 6.5 or 7 years ago, when I was newer to the stock market, I used to follow this he's one of the biggest stock market YouTubers right now. Okay. I used to follow him because I was like, dude, I don't really know what I'm doing. I don't feel comfortable. So I yielded the decision-making process of doing my own due diligence to other people. And he was pumping the stock again and again and again. So I was like, okay, I'll jump in. And I did. And at one point, dude, I was in the red by like 85% because of this guy. And I can't blame him entirely because it was my decision to jump in. But he was making video after video after video just talking about how good they are. Not once did he mention their declining fundamentals and financials. Not once did he talk about their problems that they were having. He only pumped it again and again. So I guess it just shows back then, dude, I sucked. I didn't know what I was doing. And I think eventually I sold at a huge loss. Because even today, I looked it up. Since my buy price, they've only recovered a little bit, and I would have still been in the red by like 60%. It's not just Carnival Cruise. This dude, I checked out his channel the other day. He's still doing the same tactics, taking advantage of people who don't know what they're doing. His thumbnails are always clickbait. Every title invokes emotions and a sense of urgency. I get why he does it. I refuse to do it. I guess it's kind of like, I'm not trying to say I'm morally superior than him, but I just feel like I don't want to go that low, right? To clickbait every single darn video. But it's not just Carnival, right? He's also had some companies go completely bankrupt that he was pumping again and again and again, like Tattooed Chef, the Very Good Food Company, Voyager. Like, I don't know. I can see why people gravitate towards him because he did get lucky with some companies, right? Like Meta, Tesla. But I feel like the majority of the companies that he's pumping constantly, I think you would have been in the red by like 90%, if not 100%. So I'm not a fan of the guy. I don't like him. And I feel like that's why I'm losing this game of YouTube. I think the reason why he's so successful and why some other YouTubers are successful, you know, I was doing some benchmarking and I noticed that their thumbnails and titles, they are clickbait. But once you click their video, then you watch the real content, and I think that's how they get their views and build a following. And the reason why I'm losing is because I refuse to do the clickbait. So I feel like once people get a chance and opportunity to see my normal content, I don't think the earnings this week style is my normal content. I think this is just my weekly sitting down with you over a glass of beer and we're just talking, we're just hanging out and having a conversation. But if people were given the opportunity to watch my regular content and see my sense of humor and see how much value they get, I feel like my views and numbers across the board would go up. I mean it too. But I just feel like it's not proper for me to constantly be pumping my own stocks, to be constantly saying, this is the last chance, or to put fires and flames all over the title and thumbnail. Like, I don't know about that, dude, because I just feel like it's predatory in terms of how you're attracting the peoples. But I understand why they do it, because psychology tells us that curiosity and invoking negative emotions is the way to go in terms of getting views and clicks. But I just can't get myself to do it. Maybe I should, because my numbers have been declining across the board. Maybe I should, but I don't know. I also feel like if I do, I'm selling myself out. But yeah, some of you probably know who I'm talking about. Not a fan of the guy. Whenever his videos pop up, I always click not interested, because I can't be the only one, right? He gets hundreds of thousands of views on every upload. I'm sure there's other people who blindly follow him into his plays, the companies that he's pumping up. And that's why if you watch any YouTuber who does stuff like that, dude, stop. If they're not showing you their financials and fundamentals and digging through the numbers to validate their investing thesis, just stop. And even if they do, you should always do your own homework and analysis too, to see if you reach the same conclusion of how good this company is, because I didn't do that. Right? I really wish I would have done that, because I would have never invested into Carnival 7 years ago or whatever. Terrible. Even today, I don't think they're undervalued. They're terrible. Yeah. Anyways, this is probably going to be my most unpopular video. Half the time, we're not even talking about stocks, and I just spent like 5 minutes trashing one of the most popular ones who has a dedicated and loyal fan base that if you know who I'm talking about, you're probably going to come after me now too, like dislike my videos. And but I guess I just think about all the other people he might have screwed over with Tattoo Chef or Voyager I think they went bankrupt, right? And like if you invested into those companies following him, you lost money too. So it's like, don't like the guy. And that's why I always choose to be very careful of what I say, because even when I reach a conclusion that a company is a dividend compounder with cheese, what do I always say? Don't just follow me into this. Make sure you do your own homework so you can figure out whether or not right? I say stuff like that because I want to encourage people to always be poking holes in my thesis so you can do your own research to see if you like a company or not. Just because I like one doesn't mean it's a good company. Case in point, I messed up pretty badly. Well, it was 3 companies, but now they're recovering. But it was FMC, which I'm in the red by like 9% or something. Oh, I didn't see it coming. Cyclical, chemical, pesticide, insecticide company got screwed. But I think it's an easy hold for me because I think once their destocking and inventory levels stabilize, they're going to go back to normal, being the way they are, and then I'll sell out of it. But that one I feel sad about. And then AMD and NVIDIA. Those are my 3 biggest losers. And I always think about the people that, from watching my content, I don't ever want someone to have been like, dude, he likes FMC, I'm going to go in with him. And then now they're also in the red with me by like -9, 10, or 15%. Terrible feeling, right? And that's why I always try to encourage people in the middle or in the end of the video, like, dude, I'm not a professional, I'm not a financial advisor. Do your own homework. If I could go back in time, I don't think I would have invested into NVIDIA or AMD. I think I knew that on paper, semiconductor companies and chips, very cyclical. When they're hot, just like the home building companies, right? When they're hot. But when they're not, dude, they go on a massive sell-off. And yeah. Anyways, is there anything else that I wanted to talk about? I think that's it, right? Oh, last week's recap. Yeah, so last week I said there's 2 companies that I was going to be monitoring, and I just wanted to do a follow-up. The first one is Adobe. I own 2 shares. Why? Because they're freaking expensive, and I bought them when they went on their massive sell-off. Because once I did my own homework, I was like, dude, this is actually a pretty darn good company. Their economic mode is pretty good. Their products is good. Their numbers are growing double digits year over year. And their earnings, I thought it went really well. They crushed it. The expectations blew it out of the water. However, they went on a massive sell-off. Because what's the key word right now hyping up the stock market? AI. And their guidance was not out of this world bullish in regards to AI. They were just like, yeah, well, we're doing good. I think we're on pace and we're on target. And because of that, they went on a massive sell-off. I'm like, you beat the earnings, you crush, and you still going to sell off. You miss the earnings, and the analysts are mad at you, you go on a sell-off. I feel like it's a very overreactive, emotional stock market that we are operating in right now. Yeah, so Adobe, I think I'm just going to continue to hold because when I look at their numbers, their revenue grew by 11% year over year. Their economic mode, my investing thesis for them hasn't changed. So I'm going to continue to hold because I think they have the potential to go back to 500, 550 a share, at which point I'll probably sell. But for the meantime, this one I can sleep soundly at night, Adobe. And then number 2 is Crown Castle, which was the other real estate company that I had, but now I don't because I sold out of them. Anyways, during their earnings, how did it go? As expected, they finally made the decision to sell the fiber segment of their business. Do you remember how last week I was talking about that's what's holding them back, like grabbing them by the ankles as they're trying to walk? Like that's why their margins aren't as good because the fiber business, dude, it sucks. And I told you, once they sell it, they have the potential to be like their rival American Tower. The cell tower renting business, super good, super lucrative. Fiber, not so much. So once they sold it, dude, their stock went on a little rally and I decided to sell out of it. Reason being is that I'm going to use those gains, from that transaction as capital to buy other companies that I'm watching right now. If you made it to this point in the video, you get to find out. So I'm holding on to that cash. I think I sold 10. I like to buy in increments of 2, 5, or 10 when it comes to dollar cost averaging into companies. I sold 10 shares. I think that's how many I owned. Anyways, 10 shares of Crown Castle, and I'm going to use that money to buy into another company whenever they go on a dip that I feel like is a good price. Those companies include Google, Microsoft, Booz Allen Hamilton. Well, it depends. If SAC or SAIC, however you pronounce it, if their earnings on Monday is trash and they say like, dude, Doge is wrecking us, I am not going anywhere near Booz Allen. But anyways, moving right along, and the military stocks. So I think one that I'm really monitoring right now is Lockheed Martin. You should watch my top 7 military stocks video, but Lockheed Martin and Huntington Ingalls, those are the two that I'm monitoring. Would love to dollar cost average into them. And I don't know if you guys noticed or not, but the BDC stocks, not all of them, but some of them are also coming back down to earth. Not because they did anything wrong, but because now we're finding out that we're going into a high inflationary environment for longer and the economy is turning for the worse. So BDCs, financials like banks, they're also going on a sell-off. And some BDCs that I've been watching, dude, their valuations are getting decent again. So using Crown Castle, thank you for your service. I'm going to be using those gains to buy into either a BDC, more shares of Microsoft, Google, military stocks, or even Booz Allen. That's my game plan. Anyways, let me know how you guys feel. I feel like this video was all over the place. I apologize. I was having a pretty rough weekend. My allergy symptoms were killing me. Got terrible sleep because of that, sneezing and rubbing my eyes all night. Like, my mental health was deteriorated from the lack of proper sleep. But I guess it just goes to show I'm human. I'm not able to just come up here and be super juiced up and hyper and happy all the time. But this was a rough filming session. But now that it's over, I can say it was kind of fun. I just love what I do, guys. I love YouTube. But anyways, what's your game plan for this week? You heard my game plan. And stay safe. Good luck in the stock market, and I'll talk to you next time. See you guys.